Over the last 10 days, I made $6,200 by using one strategy and one setup. Now, it wasn't about taking tons of trades. I didn't even sit at the chart for 8 hours. I followed one system that I've been perfecting for years and I just stuck to it. You see, the truth is, most traders lose money because they don't have a process. They bounce between strategies, overtrade, and second guess every single move. Now, I used to do the same, but this strategy has changed that completely for me. It's built on precision, not prediction. Waiting for the market to show its hand, then stepping in at the right moment. And once you understand how to trade with real momentum instead of trying to catch every single move, well, your results, they shift very quickly. In this video, I'll show you how I executed that strategy consistently for the past 10 days, how I planned, waited, and took profits without the stress. This isn't about hype, it's about what happens when you trade with discipline and a system that works. Let's get straight into it. This is the gold 15-minute trading strategy, which can only be used taking sells. So as you can see, it's traded on gold. The 15-minute time frame for all analysis and trade execution. We only trade from 9 a.m. to 3 p.m. London time, Monday to Friday. We focus on the high volume hours during the London session where gold typically moves with direction. And again, directional bias is sells only. So setup criteria is pretty simple, and I'm going to walk you through it right now. So it's only used for sells just because of the specific time and the pair that we're trading. As you can see, it's gold. As you can see right here, what we want to look for is a market structure shift with displacement. So we only want to have displacement this time. Before, we would just look for a market structure shift, but let's just make sure that it has some displacement to go with it. So as you can see right here, boom, there's a market structure shift with displacement. So let's just mark that out as MSS. You also want to be able to identify a liquidity sweep prior to that. So as you can see right here, we should be looking for a liquidity sweep on top of that. Boom. And before I continue, if you guys want us to pass, manage your funded challenge, and get you a payout, and remember, you don't pay us a single penny until you do get that payout. We have helped hundreds of traders do this, and you can find out by clicking the first link in the description. So how it works, you keep 70% of the profits, and we take 30% of the profits. So just click the first link in the description, and let's get straight into that. But as you can see here, liquidity sweep, market structure shift, very important. As you can see, identify a clear bearish impulsive move towards the downside. That's what we're going to look for, and it should be strong for a directional move without deep pullbacks. Okay, so it's pretty simple to mark out with the Fibonacci as well. And our entry zone should be the 61.8% or 62% zone, and our confluence, bearish order blocks, FVGs, and liquidity sweeps to increase the probability of the area. So entry confirmation, we look for price to tap into the 62% retracement zone. Again, this is with the bearish engulfing candle, the long upper wick rejection, and the lower time frame, which we can use to find breakup structures and what's not. So our stop loss placement will go just above the high, and our target will be a minimum of 1 to 2 risk to reward ratio. So you can see right here, we have everything, and now we just want to mark out from high to low, just like this. And where we're going to be entering, we're going to be entering off of the 62% zone. We're just going to put our stop loss out of the way, quite high, just to avoid the spreads on gold. And we're always going to target 1 to 2 hour no matter what, because it's the most consistent ratio. So price would typically pull back into our retracement zone. We have a stop loss wide enough to avoid the spreads. Maybe it could react straight off and push towards the downside. Maybe we could fill the stop loss and go into drawdown just a bit, but we could expect price to just pull out on top and then start pushing towards the downside. So what we're going to do, we're going to get into a real chart example, which I have right here. Really simple. So first things first, let's just wait to see if we do get a market structure shift with displacement, because that's most important in this case. So you can see right about here, we do have a market structure shift with displacement. As you can see, we have this entire displacing leg right here. You can identify a liquidity sweep towards the previous side of the market. So the market looks, and it seems to be pretty good. we're gonna mark out from high to low. Boom. As you can see, we're gonna enter off the 62% zone. Put our stop loss just above the high, just to avoid spreads. And we're gonna target a nice 1 to 2 R. We could even decrease that stop loss just a tiny bit, and there you go. And target 1 to 2, boom. As you can see, we do have liquidity points on the previous side of the market so that we can actually have a guaranteed take profit. As you can see right here, after playing it out, we tagged right in, it distributed towards the downside, and it does end up going much lower than we actually anticipated, which is extremely good, and that's what we want to see with our trades. So as you can see, it does end up going much lower. Again, don't forget to like, comment, and subscribe. And if you guys want us to help you get a payout and you don't pay a single penny until you do get a payout, click the first link in the description, and I'll see you guys in the next one.